Hello everyone. There's a pair that I wanted to talk about this week that I'm particularly interested in, and that's the pound dollar. I think of all the US dollar pairs, this one probably has the most opportunity this week and for the next couple of weeks. You should always try to use a combination of technical and fundamentals when you're doing trading for the highest probability of success. And when I'm looking at several different charts of the pound, I do see patterns that indicate that it's going to be moving to the downside. You can see a simple monthly chart pattern with this big resistance line dating back from 2008. You can also see a weekly chart pattern of the pound, which shows very simple rounded top here, and that's a bearish pattern. You can also see a wolf wave that is formed. Now, a wolf wave can be either bullish or bearish, but in this particular instance and situation, this is a bearish wolf wave pattern. 1, 2, 3, 4, 5, and the sixth would be down. You can also look at a chart of a delta timing, which is a little bit different from most of the charts that people look at. It can sometimes give you a pretty good indication of how a particular pair is going to move based on its timing, based on the past movement within the yearly cycle or the monthly cycle. So you can see that based on what happened during the last period cycle, it looks like an intermediate term delta 7 might be in, and we may have already hit the intermediate term delta 8, although it's actually due later this week. So I'm thinking possibly a move down for 8, a slight move up, and then another move down. And we can look at the daily pattern of the pound. It looks a little bit like there could be a head and shoulders here, but there are so many head and shoulders that form on these charts all the time, and they really don't become very good indicators unless they do make a definitive break one way or the other, downward or upward. So I would wait and see on the head and shoulders. And you also want to look at the fundamentals for this pair. And of course, we have the Bank of England meeting this week on Thursday. They're probably not going to raise interest rates because the UK did have a contraction for the second quarter, which was released on March 29th, of 0.5%. So even though they do have a problem with rising inflation, they're probably not going to raise rates while the economy is in a contraction. And of course, Chancellor Osborne did earlier last year institute a pretty severe austerity budget with a lot of big cuts in government spending, some increase in taxes, and it indicates that there are going to be some tight times ahead. So probably the Bank of England's going to hold off on the rate increase this time, although of course you never know, and it's always very risky to hold over a particular central bank decision meeting. And you also want to look at, when you've got the two pairs, ideally if you're going to short, you want one of the pairs to be in a downtrend and the other one to be in an upward trend. And with the US dollar, we do have the US dollar here, and the chart looks very bearish, but that's because it's over 50% weighted with the euro, and of course the euro has been going up on the anticipation of interest rates. But the main factor for that is obviously the Federal Reserve and their purchases of maturing obligations, which has been occurring for 4 months now. That's slated to end in June, and the indications are that it will in fact end in June. So I think that there's probably going to be a move downward in the riskier currencies and a move upward in the dollar this summer. And some people who like to do long-term trades might want to get in anticipation of that happening. That's the type of situation where you could make 1,000 pips on a trade. And of course, nobody really knows, what any of these central banks are going to do, but we've had very strong job reports and other indicators of economic growth in the U.S., so I think it's likely that the U.S. Fed is going to stop its program of quantitative easing, which has been pumping liquidity into the market. So I want to zoom into a 4-hour chart of the pound and look at what might be a point at which to short. And you can put up a Fibonacci retracement. That can sometimes give you a good indication. The pound is one that does like to stop at these Fibonacci levels. And you can see that the 61.75 level might be a resistance point at which to short, or the 62.25 level. And you can also see if we did have a true delta top, that it's at 64, in which case a prudent stop would be slightly above 64. If it were to break out above that level, that would not be a place at which you would probably want to have a short position. So we also have the central bank meeting of the Australian dollar, the Reserve Bank of Australia, and we also have the ECB, of course, meeting on Thursday. And if Mr. Trichet says something which is particularly hawkish, then of course it might have an impact on the pound. Sometimes one central bank says can impact the other currencies just because they give an insight into what's going on in the global economy. But if he talks about the sovereign debt problems and the spiking interest rates in the various EU sovereign countries, then of course that could make the pound go down. But does not show that is not what he's likely to do, because his past patterns of speech and tends to be a very prolific gentleman. He really hasn't talked about the sovereign debt problems. He's mostly talked about inflation and price stability. So we'll see what happens this week, and I'm going to be looking at these levels for the pound dollar, and I do like this to the downside in this particular situation.